Hi, Ken Ravago, Real Estate at RE/MAX. Today's video topic is really a very interesting one. As you know, I also own a property management company, and I get a lot of inquiries on my website about what kind of credit score do I need in order to purchase a house. So today I have Brian Maier with Mortgage Box to really shed some light on credit score, frequently asked questions. What do I need to be able to buy and purchase a home here in Las Vegas?
That's a great question, and there's a lot of misleading information online because a lot of lenders have different restrictions and different overlays they call. But ideally, 620 and higher.
620 and higher
is where you want to be. However, there's loan programs we have down to a 580 and even down to a 500.
Wow.
So if you think your credit's bad is different for certain people. I've heard people say their credit's bad and they're 680, and there's lots of ways to get financing all the way down to a 500 credit score. Now, that being said, different loan programs for different credit scores. If you're over 700, generally it makes most sense to go with a conventional type loan.
Okay. Because
conventional loans are very credit score driven, which means if you're 740 and higher, that's the top tier. But every 20 point increment from 740 to 720, 720 to 700, as your score drops, the interest rate goes up. So your terms get less favorable all the way down to 620 in the conventional world. Once you hit 620 and start going below that, conventional is off the table. Now we have to look at FHA and VA. So because FHA is not credit score driven, so somebody with a 740 is going to get the same interest rate as somebody with a 640.
So FHA is not credit driven.
It's not credit driven from a pricing standpoint.
Okay.
So the interest rate, they don't have those tiers for excellent credit, good credit. The interest rate's the same for somebody with an 800 credit score as it is for somebody with a 660 credit score.
Very interesting.
So it can be done, and there's a point around the high 600 range where on a conventional loan, because your score's lower and the interest rate goes up, there's a point where we actually look at doing FHA because the FHA rate ends up being significantly lower than the conventional rate with the same borrower, let's say with a 650 credit score. But we do FHA under 580, but under 580 it generally requires, there's some compensating factors that are needed, and one of them is down payment.
Okay.
So if you're looking at doing like little down payment or no down payment, with FHA, it's going to be really hard if you're under a 580. If you're under a 580, you're going to need a minimum of 10% down on FHA. But if you're over 580, you can still do a 3.5% down FHA. And if someone is interested in finding out more about that, let's say they're renting or a tenant somewhere, and they think their credit may not be good enough to buy, we can always keep in mind too, a lot of people have what they call like a credit monitoring company, like Credit Karma.
That was my next question, yeah.
It's a little misleading because there's a lot of different credit scoring models out there.
Okay. The
Karma score is a Vantage score, whereas we run what they call a FICO score on a tri-merge. So it's a different credit scoring algorithm. So your Karma score may say 580, I run your report through a tri-merge FICO and it might be 620 and vice versa. So you don't necessarily want to just go off of your Karma score or your personal credit score that you ran yourself.
Yes.
You really want to look at what the FICO score is and what our model is. Even when you get a car, it's a different credit scoring system that they use to calculate that, calculate that credit score.
So it sounds like those portals, Credit Karma, it's just a good starting point.
Very good starting point. And you can see trends. So generally, if your Karma score is going up, it's a good sign.
Okay.
If your Karma score is going down, it's a bad sign. But it's not necessarily going to align with the credit score that we pull.
So when for the viewership, if you have a question, if you're on the fence as to renewing that lease for another year, you owe it to yourself to find out more about getting approved for a loan, and your credit score, like you mentioned, if it's FHA is not credit score driven.
Correct.
And there are going to be some variables we can play out with down payment and such. So please give us a call, or you can click the link below to reach me, and I can connect you with Brian Maier over at Mortgage Box, and his information will be there as well. So Brian, thanks for allowing us the time and speaking with us about this important topic.
All right.
And again, we'll talk to you soon on the next video. Thank you.
Thanks.